First of all, thank you everybody for staying up to this point. I know that this is one of the last sessions, so I hope that we are going to make it interesting for you. And the title of this session is Strategic View. So I hope that we are not going to overlap or repeat some of the ideas that were previously already mentioned. And I hope that we are going to inspire you in terms of what that future might look like. And what I mean by future, probably looking beyond 3 years and not longer than 5 years, I would say, to be safe. So maybe let's start with introductions. Why don't we go with you, Rockman?
Hey everyone, I'm Rockman Law. I'm an investor at Merantix Capital. We are an early stage AI fund investing in application layer startups. And before that, I was a co-founder of a cybersecurity company. And then before that, I was an engineer.
Zhang, currently an advisor for Point72 Ventures. We are a billion-dollar US-based venture fund, investing mostly in also the applied layer of AI, which is mostly enterprise, defense, and consumer. I cover enterprise AI in Europe for the fund, and prior to that, I was the chief operating officer of an AI company based in London called Poly AI, which is a voice automation company.
Pleasure to be here. My name is Adam Saeed. I work for Octopus Ventures, who are a London-based generalist large fund, about £1.5 billion under management, and I help manage our core B2B software and increasingly AI application-focused fund with about 50 companies in that portfolio, typically Series A, Series B focused across a whole range of sectors, business model types. And we most certainly have been increasing our appetite and focus on AI, and certainly even at an earlier stage than what we typically would as well. So yeah, great to be here.
Mm-hmm. And maybe I will make a quick introduction for those that didn't meet me this morning. My name is Agata Nowicka. I'm the managing partner of Visionaries, but I've also been in the ecosystem for some time, first as a founder of 2 startups, and secondly as a VC investor. So why don't we kick off with maybe a broader view of where we are in the AI development cycle. Obviously, we've gone through different phases. I'm not even counting, 1960s or 50s. I'm talking about the past 3 years. We've seen ChatGPT released, then there was a lot of talk about foundational models. Now everybody's focusing on agentic future. Where do you believe, maybe Jan, we can start with you, where do you see the biggest opportunities for investments are? Are they more on the foundational level, the likes of OpenAIs and so on? Or more on the application layer, maybe what we define sometimes as ChatGPT wrappers?
I would say that there are definitely opportunities on the foundational layer, although I think it's a very specific type of opportunity for a very specific type of fund. You have to be very well capitalized and also probably have a strategic imperative to play in the foundational layer. So let's just set that aside for a second. I think most of us, certainly I know Rockman and Adam, we largely play on the application layer, which I guess you can stretch to include some infrastructure plays as well. And I think that for us, certainly, we're much more bullish on vertical applications rather than horizontal applications. I think that there's always the worry that foundational models will just get better and better and wash out the capabilities of horizontal players. And then when you're in a vertical type of, if you're solving a particular problem workflow for a particular type of enterprise, you're able to gather the data, the edge cases, the knowledge, the know-how to build a sustainable moat. And so we're excited about that more so than the horizontal players.
Mm-hmm, mm-hmm. How about maybe you, Adam, because you've gone through a transition of SaaS, looking at SaaS businesses to now potentially application there as well. But where do you see those opportunities?
So interestingly, as you look at the opportunity that's ahead of us with AI at the application level, which similar, we at Octopus Ventures, that's typically where we play. We're not putting tens of billions of dollars to work at the sort of larger foundational level. So from our perspective, interestingly, we see an opportunity. I'm sure there's many companies perhaps in this room which have were once software companies, and now they all refer to themselves as AI businesses. And so we still see big opportunity for the software companies in our portfolio to capture this market opportunity as far as being fast and specific with regards to the features and products that they look to ship. But in terms of new AI-born businesses that we're looking at, we're certainly really trying to double-click on the depth of product market fit. And we are actually making investments. We'll be quite frank. We're making investments into companies who have, they're putting some incredible numbers in front of you, some of which have GPT wrapper type of tendencies to them with some high disruption risk. But we really are betting on the team and the pace in which they can turn product market fit number 1 into 2, 3, 4, and 5, and use their small incumbency lead that they have in their typically vertical they're playing in. And so speed is a big factor in that respect. And so, but we do have to be mindful and cautious of the ability for the foundational models to easily replicate and blow out, and also for anyone in this room to start an equivalent business. So it's a lot to consider, but that's some of the themes.
So maybe just adding to that, because we've mentioned product market fit, maybe Rockman, over to you. Have you changed the way you think about product market fit, or what signals do you look for when considering whether someone has got that?
Surprisingly, I have. So in the early stages, usually investors, and I count myself kind of as one, we usually look at 2 things, 2 dimensions, founders and markets. And for most AI founders building in certain industries, they're usually quite large. So directionally, they're going in the right direction. But now in this new age, how do we assess founders? And previously, it could be the technical expertise, the ability for them to build a scalable kind of product, and then understanding of domain expertise. But now, I think there's slightly different things to consider now. It's also kind of about the speed at how they can keep up with the latest AI researches and techniques. Because like Adam and Jan were saying, the research coming out and the new models and new features coming out is so rapid. And if the founders can't keep up, they don't know how to think about the product roadmap, and then eventually how they can keep ahead of their competitors and incumbents kind of as well. So the ability to understand how to stitch together different models, what to use different models for different, outcomes, I think that's super important. But then also just speed of execution. There's lots of code gen kind of products in the world kind of right now. There's really no reason for someone not to be able to whip up something over a weekend, to validate it, to test it, to see if people will start using it. So that no longer is an excuse. So is that. But then as we move further along, it seems like there's not a lot of differentiation, defensibility kind of in there. I think what we're seeing next is the brand of the company will really be kind of important, because there's so, capabilities will eventually become commoditized. Then it's a case of, what's the emotional feeling and connection between the user and the actual kind of vendor as well. So I think those are some of the key things I'm keeping an eye out.
I would also add one more thing in the product market fit, which is also markets. I think that we also live in the era where that market is also a moving target. I think it's, there were markets before that obviously experienced growth, but now it's also this kind of level of uncertainty when it comes to where this market is going to go. So am I going to, that product market fit that before was almost like a certain, and then you build on that expansion. I think that now there's not so much uncertainty. What are your thoughts on that? Maybe Jan or Adam?
Sure. I think that, again, I very much agree with what Rockman said. I think that the capability is getting commoditized, but that is the 0 to 1 prototyping capability. So what actually is now even more important is the founder's ability to get access to the problem. And because there's a difference between how you would imagine AI would solve a particular problem and workflow and how it works in reality in an enterprise setting or even in a consumer setting. And so it's super important that the founder actually gets the first pilots, the first kind of POCs, the first enterprise clients, for the enterprise client to trust a startup, for them to actually see how it works. And that is that distribution capability is really, really important. And we look for that. You know, even in a seed stage company, how many POCs, how many conversations have they had? Are they actually getting access to the data to the problem? And I think that's a skill we track.
It's interesting, yeah. So I think that access, but also, access is definitely one of the differentiators.
I do feel quite strongly that a lot of the responses I feel we've all just given have been what the definition of success of building a strong software company over the past multiple decades has been, which is deep understanding of a problem and context, strong technical capabilities, the ability to pivot and adapt. I appreciate the pace at which we're operating in this world is probably unlike anything we've ever seen before, but the heuristics are very, very similar. And there's similar stuff around building a data moat, network effects, all the same characteristics as what we've always seen. But I think to Jan's point just then, a lot of the predictions of 2025 being the year of AI agents, and this is the time for enterprise customers to be putting serious dollars to work. The reality is that we're actually still searching for use cases. There's been hundreds of billions of dollars been put in the ground in GPUs, but actually turning this into the true multiplier effect use cases, it still has to come to life. And founders and sales leaders who are good at opening this first chapter of all the data privacy concerns, the cyber concerns, all this type of stuff, I think it's probably 10 times more important than what it was previously.
Okay, quite few interesting ideas there, but maybe I would like to shift gears towards actually a topic that I haven't covered in our prep call, but I thought that it hasn't been covered today. I haven't had that covered, which is a good opportunity maybe for this panel, which is also AI has been transforming the VC game, meaning we are seeing more bootstrap founders. There's the whole conversation about founders maybe not necessarily needing as much capital, and then, until they reach profitability, and then what happens then? Potentially, that opens the door for them potentially to raise debt financing or alternative financing routes. How do you think that VC space is going to kind of transform as a consequence of that?
I'll take a stab at that. So I always tell founders that I don't think VC funding is the be or end all. And I think most founders shouldn't raise VC funding. I mean, VC funding, if you really boil it down, is basically jet fuel, right? Something's working, something's been validated, you want to grow, you need resources to grow, let's put more fuel on the fire. But to complete that analogy, if you haven't built the engine of a jet plane and you try to put more fuel in, it'll explode. So it's not a product for everyone. Now, saying that though, to my earlier point, if validation is now a lot easier or more straightforward to get, then actually I would make the argument that maybe we would need more VC kind of funding, because previously, a lot of money needed to be put into early stage startups to get to a validation point. Build a product, go out there, test it with kind of customers, and then see if they can acquire kind of revenue kind of for it. If right now it's a case of, okay, well, we can validate it over a weekend, then it's a case, and you can make the argument, and we can see the data, then actually maybe we need more kind of venture kind of fueling. So that's just a counter argument. Could be totally wrong, though.
So just so I understand, so basically you're saying that more venture will be possible as a consequence,
Correct,
and there will be fewer, kind of more startups, and therefore more capital will be needed. Yeah. Do you have any thoughts on that?
I'm going to talk against my profession here a little bit. I think there's no better time to be starting a company, to be honest. I think if you look at the three things that are widely publicized as the major reasons why companies fail, which is lack of access to great people, lack of access to capital, and lack of access to skill to be able to solve problems yourself, I think AI unblocks those three things in ways that have never been possible before. And so I can't tell you how many meetings I've had in the last few months with early stage founders who have raised a seed round, and I've educated myself on this terminology called we're seed strapping as a business now, which is a company that only really needs like $1 million, $500,000, and they're in decent mid-single digits ARR, profitable and kicking on, and they own 80% of the business. And so that wasn't a dynamic 3-4 years ago. And so from our perspective, I'll give a later stage lens on this. We've been forced down the curve. We've basically saying we're not going to be able to find these companies sitting there as a spreadsheet investor waiting for them to get to a Series A. We absolutely need to do the $1 million checks to become their partner, and if they need some more money over time, we're there for them. But a lot of the time they won't.
And then exits are through secondaries, or because that's maybe because you also invested the kind of your fund also exists.
So I'll talk about it from a growth perspective, but I also just want to say one thing from an early perspective, which is that I think this type of discourse about whether VCs are necessary or whether entrepreneurs need VC funding, this discourse was very popular around 2005 when cloud computing came about, because the very, very first wave of internet companies spent a lot of money on servers, and all of a sudden they didn't need to, it became like an OpEx cost rather than a CapEx cost, and people were like, do you need VCs? If you allow there to be more entrepreneurs, if there are more founders, then the competition is going to be severe, and then you're going to differentiate through capital, right? So I think that is almost a given certainty. The second thing I want to say is on the growth side, I think what you see is a lot of VCs are restructuring themselves to be general investors. They're kind of shedding the VC model in favor of a mix between private equity and VC. And the central kind of assumption there is that a lot of what AI is going to disrupt and transform are traditional businesses. And these traditional businesses, you can rely on or you can count on maybe an enterprise SaaS company that's AI based to either do the hard work of selling and transforming the companies, or you could just buy them. Right? And there's plenty of capital on the market for you to do that, to buy them and to transform them, to roll up. I mean, Thrive is doing that, A16Z is doing that, Lightspeed. Our fund started a hyperscale fund about 4 years ago, where we made 3 or 4 investments that are roll-up investments that with an AI thesis. So I think the growth side of the scale will deploy capital differently in that way.
And even what we define growth when it comes to these capital requirements is also going to be defined, will be something, we've talked about pre-seed, then many of those companies, in order to scale anyway, need to raise significant capital, that's one. So that significance is probably even higher at Series A or Series B than ever before for that competition, for that land grab. But also how we think about, OpenAI's Mistrals and so on. They went very rapidly into hundreds of million rounds. So that's also kind of, in my opinion, how we defined growth. It's not going to be as linear. It's going to be at the different levels of magnitude. So that's also interesting. So since we have just time for really few questions, maybe, so we've talked a little bit about basically companies and FOMO. We've seen those huge rounds from Perplexity, just announced 3 days ago, or obviously OpenAI, $40 billion, unprecedented round. Kind of how do you balance, internally, appetite for exactly looking at those founders that you see as a kind of committing to founders that have moonshot quality when it comes to their businesses versus pragmatic revenue generating startups, maybe potentially with a faster path towards profitability. So where do you sit on that scale?
Well, I would say that, so I think that moonshot is a little bit different than the foundational AI. I mean, foundational AI now is, it just requires a lot of capital, but its future influence is all but assured. And so these are incredibly capital intensive companies that really will duke it out because of strategic reasons, right? And that's like, it's almost like airlines rather than VC. But then you do have, I still think it's important, especially in the early stages, I think I think maybe somewhere between seed and Series A, it's really important for the VC to believe that you can be an extraordinarily big outcome. I see endless companies going to use AI to automate this one specific aspect of compliance, and they are, going towards 1 million in revenue, and you just wonder if it's going to be a venture-sized outcome, right? And I think that I think it's possible for the founder to be able to tell that story, but a lot of them don't. And you wish them all the success in the world. They're probably going to get success, but not a venture scale one.
I think a lot of it depends on what the investment fund's risk appetite and mandate is. So appreciate we're going from pre-seed all the way to later stage growth here. From our perspective, as one participant in the market, like we've typically always wanted to see good levels of revenue traction, all the usual attractive SaaS metrics. It is challenging to try and transpose that playbook into the world of AI, because we'll see ultra explosive revenue growth, gross margin that doesn't look so great, retention numbers that aren't necessarily proven out over multiple periods. But yeah, I think it's interesting because we happen to be looking at this particular new universe of AI in increasingly new in terms of from a generative AI perspective, but in a time where capital markets of startups has been terrible the last few years. And this sort of flavor of the month for probably a few years now has been capital efficiency, making sure that that sort of growth of all cost mentality of the zero interest rate environment sort of washed away. And so with that backdrop, the challenge for founders is actually, and the ones that we do love are the ones who still do have a lens on the fact that capital isn't completely abundant in that respect. And so we from our perspective are still looking for ones who are looking to build resilient businesses, and they're always thinking about depth of product moat and how much of a differentiation and long-lasting robustness of their revenues they can have.
So when I hear the word moonshot, my mind immediately goes to deep tech, and maybe that's just my background. So on that line of thought, then if that's the case, deep tech usually means that there's technical uncertainty. There's things that haven't been proven out yet. It's different. So like what Adam was saying, it will depend on the fund thesis. Merantix Capital was not known to be a deep tech kind of fund, but that doesn't mean we don't want to see what the founder is building. Because eventually, in my mind, I could be wrong, deep tech will, if it continues up the TRL level, the technology readiness level, it will become a widely used technology at some point. So then it's a case of what do we think the line of sight or the line to, time to market is for that particular piece of deep tech technology. And if we think that it's actually within the life cycle of the fund, usually 10 plus 2 years, maybe sometimes a bit longer now, then maybe we can see, hey, we think that the team can commercialize this technology, and within the lifetime of the fund, it can actually then become something that's hugely revenue generating, and we can see a line of sight to revenue and to become a $100 million kind of company, then great, let's go for it. So those would be the considerations that I would think about when the moonshot kind of tag comes up.
Okay, so one other topic that I want to tackle that I also haven't heard today being addressed is this notion of basically my observations that definitely there is a I cannot say raise because that's been the case in any case for the past few years, but the raise, let's call it, of a technical founder. Meaning almost the expectation, there is a kind of, let's say, more enthusiasm towards ex-engineers from maybe some of these successful big companies, I'm not going to be repeating the names, but becoming now, turning into founders or scientists, becoming entrepreneurs. Where do you see kind of that being potentially reflected in your investment decisions? Do you see that trend to be kind of, where is it going, that trend is going to go? Or maybe you think that this is not a trend. You're actually open to, business kind of led entrepreneurs. I guess you need both, but still, I would like to have your thoughts on that topic. I know I'm asking not common questions. I know.
Yeah.
That's on purpose, by the way.
Well, I just want to share that it's, even though maybe people put them in the same bucket, but I think the engineer founder is very, very different than the academic researcher founder. And I think that that is something that, so Poly was a research founder type of driven organization. And so, and I think it's actually quite suitable and important for AI because engineering at a cost of maybe offending some of the engineering people here just to typecast, but like the mindset is very deterministic, that I want to build a system that works in a certain way, right? And I want to optimize for certain things. Whereas I think a researcher is much more agnostic about the outcome of certain things. And so when you actually put AI into practice within a certain domain, the approach is very different.
But my question was not even scientist versus engineer. It's probably engineer versus business person. So in SaaS, technology, it was kind of because of certainty of technology. Do you see what I'm saying? It was much easier to be just a business founder or bunch of couple of MBA students to build a company. Today, I think that there is a notion of preference towards engineering founders. That's just my observation.
I mean, ideal scenario, and we've got a company in our portfolio which is in the legal tech AI space, which is ex-lawyer plus highly technical team from an AI engineering perspective, deep contextual understanding of a business problem, team with the right technical capabilities, who are keeping their fingers well and truly on the pulse with regards to how the game is changing around them right now. And I think you have to drive a culture internally for all your devs or pretty much everyone in the company, to be perfectly honest. From some of the offsites I've been into, seeing the way founders are making staff all throughout the business learn about how to create agents and things of that nature. I think it's never always going to be that combination, but I think the reality is you do need that prowess of keeping the finger very firmly on the pulse and how these things are changing.
But don't you think that because of technology evolving so fast, you need to have almost a superstar kind of technical person in order to even navigate this landscape, in order to maximize all the opportunities that are presented in front of you? That would be my feeling.
Maybe very quickly, just to add my thoughts on this. This is actually a hotly debated topic within Merantix Capital. It's like, if you had to choose between a non-technical kind of founder or a technical founder, which one would you back, right? Mm-hmm. And I oscillate between kind of the two. And maybe pre kind of AI, I would say technical kind of founder every day, all day. But I'm slowly thinking now about, well, if there's so much AI tools out there to help you prototype and build products very quickly so you can test quickly, has that diminished the power? I'm not saying engineers and developers are useless, I'm not saying that, but now if it's someone with deep domain expertise, understanding workflows very clearly, very deeply, has the connections into those industries that unlock opportunities, design partnerships, and then also maybe getting access into data, real life data that others can't get, surely that is a huge competitive advantage. And then that person can then vibe code their way into a MVP and validate. So that's my latest thinking. It's not a clear kind of answer, but that's my my latest.
I have seen some of my non-technical CEOs vibe code things like that, but unsurprisingly, they're not ready to be shipped to enterprise customers.
Absolutely not. It's not scalable as well.
So there's a balancing act.
Absolutely, and you will see a lot of these early kind of prototypes. When it gets to a certain stage, the performance breaks. It's not ready for larger deployment across an enterprise. So that's when you think, okay, you really need the professionals, the actual engineers, the developers to come in and finish the job.
And you also mentioned something that Jan has already said about that access and kind of understanding of the market. So if you're a technical person, the likelihood of you actually understanding that application kind of layer market, I think that they are, unless they are deeply, again, technical, are not that clear. Yeah. So just because we are running out of time, maybe the last question, just opening it up to the future, where do you see, what industries or opportunities for kind of applying AI do you see that are potentially currently overlooked? Oh, sorry, overlooked, that's it. Maybe, yeah?
I can start.
Adam.
I'll keep it short and sweet because of time. I think we're very interested at the moment in the enablers of this transition we're going on. Companies who are helping big enterprise clean up their data architecture, just entire data warehousing as far as, without clean data, you're not going to be in a position to capitalize this technology. And I think that's going to be the biggest barrier. And also combating the various cyber risks we're going to be seeing as far as putting confidential information for customers, patients, students, et cetera, into these models. And so without betting a specific horse in a specific use case and area, which we are doing, but we are also very much keeping a very open mind to who are the enablers, which will probably do well regardless of who ends up winning the particular sub-verticals.
Okay.
I think I'll mention two very quickly. I think the first one is, I think the vast majority of businesses that I see is applying AI to some white-collar desk worker use case, someone who's using a computer at a desk. And I think that more people ought to be building for people who are not in front of a computer at work. So whether it's frontline salespeople, nurses, repair people, like people who don't have access to a computer in front of their desk. I think that use case is wildly underserved in the market.
It's a huge use cases when you
Yes. I think the second thing is two-sided marketplaces, which are the best businesses in every cycle to build, the most difficult businesses to build, and something that had you pitched it 5 years ago, you would have been laughed out of a VC's office, right? Who's going to fund that? I think AI. This is, there's a lot of variants, but I think AI can enable builders of marketplaces to speed run one side of the marketplace. So there are a lot of e-commerce businesses that are coming up that you're like, why does this, like a tractor, like a business for tractor parts, for example, or farm machinery parts, you're like, why does this business exist in 2025? This is a 2005 idea. Well, the ontology of tractor parts is incredibly complicated and nobody could really figure it out, but you can speed run it with AI. And once you can speed run it with AI, then you can build demand, and the demand builds more supply, and so on and so forth, right? I think these indirect businesses are, I think, something to think about.
Very interesting.
And maybe two from me. So online trust and safety, it's a big thing. With the rise of generative AI, like now, like phishing emails, I can't tell anymore what's real and what's not. And I come from a cybersecurity kind of background. So just the advances of kind of synthetic kind of data really questions kind of like who are the people who are online right now? Can you even tell kind of anymore? So new techniques and products and solutions to help identify, is this a person that they claim to be? I think it's going to be super important. I think the second kind of area I quite like is AI for government and to really break down the bureaucracy. Massive market, very laggard, but there seems to be political will around the world to apply AI to increase productivity and really get results. So those two from me.
Great. I think that we have time only for one question. And I think this is a great opportunity because we have not only amazing panelists, but also we can ask any questions since this is a strategic view panel. Yes?
Here, I'll bring you.
Okay, great.
We'll do this properly. Thank you, panel, for such a lovely session. As you mentioned, like maybe someone of a non-technical background, solopreneur, you would consider at the MVP stage. Like, does that mean like going forward, like as the things improve and the AI agents improve and the vibe coding kicks in, like with just a few interns or maybe mid-level technical people, like a really big company can be built even with a non-technical background by a solopreneur?
I'll take a stab at that. So I think a couple of years back, there was an article, I can't recall the name now, but it was saying that with the rise of AI, there will be $1 billion company that can be created by 3 people, right? And back then I thought, no way, come on, you're kidding me, right? But the more and more I hear and see and observe and talk to founders, I think there's trajectory and evidence to say, well, okay, maybe not 3 people, but definitely a lot smaller teams can create incredible kind of value. I do think that, yes, as a solo entrepreneur, and maybe with some support people around you, you can get to a certain stage. But ultimately, I think in business, it's still people to people. You still need to convince people, talk to people, see people to build relationships and trust in order to people to buy things kind of from you. So I'm not sure, like maybe a 3-person company, everyone can do it, but I think it'll be a lot less people than we expect building those large companies.
I think there'll be, I mean, I don't want to liken it too much to this sort of Apple app marketplace where there's thousands, millions of different sub-companies being created to tackle very specific businesses and problems. But the example Zhang gives with the tractor parts business, there's no reason why that can't be a 3-person business. And there's no reason that individual who founds that company can't have a tremendous little business which is hugely successful, probably won't be that billion-dollar unicorn like you've just said. But I think as far as B2B selling into healthcare and enterprise, the type of companies that we've backed in AI so far, the amount of quite rigorous, frustrating requests you're getting from these customers around ISO and just all the things that are attached to selling into that universe and servicing those customers, I think you'd be doing a tremendous job if you could do it with 3 people, to be honest. And so, like even the ones that we're backing, which are in the teens and growing, they're as lean as they could be, but they still have to contend with selling into some sophisticated environments which require humans at this stage still, unless you want to build a product to solve that.
Yeah, nothing to add?
No, I think everything has been said that could be said.
One thing that maybe I would add, there was a report, I think, by Agata, just published a few weeks ago on the rise of actually solo entrepreneur. Just before few years ago, or some time ago, obviously you had to kind of have at least have 2 people with complementary skills to raise venture capital. And the numbers now show that this is not the case among VCs. Not obviously not at the scale, meaning 50-50, but it's definitely a topic that is shifting. So, something to consider. Thank you so much. This is the time. The time is up. So I hope that you enjoyed the conversation. Please give the round of applause to
Thank you.
our speakers. Thanks.